I want to jump right in and basically start about, obviously, we've seen tremendous growth in the DeFi world in the last couple of months. Maybe from an Euler Labs perspective, what are you guys seeing this growth? Where are you seeing this growth coming from? Is it retail? Is it institutional? Or you think it's overall growth that we're seeing towards decentralized ecosystems?
Well, I would say, yeah. I mean, ourselves, for instance, we've seen growth from 0 up to 3 billion in just the last 9 months. So definitely, there's a lot of growth happening right now in the sector. I would say largely it's been driven by institutional adoption of crypto. Following the inauguration of Trump last year, I think that certainly helped things. So previously, crypto was mainly seen as being maybe like a retail thing, but increasingly, it's very much institutional.
And what do you think, Michael, is needed for it to have more institutional interest? Obviously, we've seen a lot of interest recently from Hyperliquid, a lot of the interest on the trading side with perps and others. When it comes, obviously, from Euler Labs' perspective, what do you think could be the catalyst? It's obviously what we've seen in the U.S. with Trump helped a lot. But do you believe something else could be needed that to really propel more interest in DeFi from these institutional investors you alluded to?
Honestly, the interest has been there for a very long time. It's largely been dependent on awaiting for sort of positive movements in regulations, I would say. Obviously, with the Genius Act in the US and some kind of movements in the EU with the MiCA and everything, certainly helped move things along. And now we're seeing this explosive growth in stablecoin adoption as well for payments and things. So as more and more people start to use stablecoins, those stablecoins, many of them will inevitably flow into DeFi, where people want to seek yielding opportunities and ways to lend and borrow assets as well. So on Euler, we see a lot of institutions. We've had adoption of a market for lending them, collateralizing BlackRock's tokenized money market fund, BIDL, on Euler. We've got Apollo credit fund also as well. We've got markets for those. So yeah, collateralizing assets from, people call them real world assets and using them to take out loans in Euler, which then drives additional yield for people using stable coins. I think that's the main driver that we've seen over the past few months.
And when, as CEO, Michael, you look at the competitive landscape, do you see your competitors being the centralized platforms who are also trying to provide yield in different ways and forms, or some of the other DeFi platforms from the Avis of this world and others who are trying to provide, let's say, yield and other services to users in the DeFi ecosystem?
It's a little bit of both. I mean, there's still huge. I mean, the DeFi market prior to this wave of institutional adoption was already quite large, and so we still have a lot of crypto native types on Euler for sure. But increasingly, we're starting to see interest from fintechs and other centralized parties looking to use DeFi as the rails on the back end, and so use Euler as a kind of infrastructure play on the back end to provide services on the front end. And fundamentally, I think that's just because the rails of DeFi are just that much more composable, more efficient, transparent, and so on. And these parties don't need to reinvent the wheel every time. So I think we're going to see a lot more of that in the next 6 months.
It's very interesting, and I think there's when we talk about this overlap of centralized exchanges and DeFi exchanges, obviously we mentioned earlier the institutional investors coming in. From a retail perspective, do you believe that we still have a UX UI problem in the DeFi world that is acting as a barrier for the entry of further retail investors in the ecosystem?
A little bit, yeah. I mean, there's no shying away from that. It's not as a brand new person, if I was trying to introduce my mum to come and lend on Euler, I think she might struggle, to be perfectly honest. But that's where this adoption of the fintech play comes in. I think if regulations permit, I think we'll see a much more efficient and friendly UX for DeFi, where actually people are using the front end of a popular fintech app like Robinhood or Revolut or whoever else, and that's actually feeding into a DeFi app like Euler on the back end, and then maybe users just won't even know they're using DeFi. They'll just receive all the main benefits in terms of extra yield and everything, but without having to face some of the UX challenges.
Absolutely. We always talk about the future of DeFi. We know when, as a CEO now, you look, let's say, down the horizon. How do you see in the next, let's say, 3 to 5 years, where do you think Euler Labs will be in 3 to 5 years, and also where DeFi will be in 3 to 5 years?
Well, I see a lot of growth, that's for sure. It's hard to say how much. I really think we might be on the cusp of moving all of finance on chain. I think a lot of people in our industry have been saying that for years, and there were maybe a few giggles and sneers from outside, to be honest. But there's been a huge number of people from banks and traditional finance that are slowly being converted. The size of TradFi is so much greater than DeFi. If we even see a fraction of that continue to come on chain, then we're poised for explosive growth. So I wouldn't be surprised to see 10x growth in the amount of TVL or total deposits in DeFi within a few years. And beyond that, I think the space needs to continue to prove itself as a more transparent and secure way of doing finance.
Yeah. Absolutely. Also, I always say that if you think at the beginning of COVID, there was less than $1 billion in TVL, and we've seen the growth that we've seen right now. Right now, let's say, what is the biggest risk you think we face as an ecosystem when it comes to the growth of DeFi? You believe there's some of the hurdles like we discussed previously, the UX UI, or do you believe there's other hurdles like from a regulatory perspective or some smart contract failures or bugs or hacks that can happen that could slow down, not by way, let's say, of an imperfect analogy, a bit what FTX did to the centralized and the crypto space a couple of years ago?
Yeah, there are a few challenges ahead for sure. I mean, I think we need more positive moves for regulators. I mean, like any technology, things are just moving very, very fast these days, and I think regulations need to keep pace with that and make sure that there's consumer protections, but still that freedom to innovate and provide a better service. The TradFi rails are kind of stuck and clunky and old and they're broken for many people. So innovation is badly needed, and regulators need to continue to welcome that, I think. On the smart contract risk, I think this industry is very nascent and smart contract development is very difficult. There's no shying away from that. There have been some challenges there for sure. However, I think the system we have here, if you use traditional finance, the policy is normally security by obscurity, which is really a failed way to do security. In DeFi, all the applications are available for everyone to see on chain publicly, and it provides a much more robust, transparent way to do things and creates a more anti-fragile financial system in the long run. So I think that won't be the biggest challenge going forward. Or certainly it's been something that's been a bit of a challenge in the early years of DeFi.
I love it, an anti-fragile financial system. That was Michael Bentley, the CEO of Euler Labs. Michael, great to have you with us on the show. I look forward to having you again in studio here in Dubai in the short term.